Welcome to PIMCO Pod. In this episode, we discuss how, as AI-related issuance reshapes bond markets, differences in US dollar and euro performance offer new insights into the roles of supply and technical factors. Stay tuned after the conclusion of the podcast for additional important information. The Credit Market Lens, the AI Split Between US Dollar and Euro Investment Grade, by Lotfi Karui. The AI capital expenditure cycle remains solidly on track to eclipse the telecom boom of the late 1990s and become the largest investment cycle since the railway build-out of the 19th century in inflation-adjusted terms. This year alone, AI-related issuers accounted for 6 of the 8 non-financial U.S. investment-grade IG companies that raised more than $20 billion in the USD corporate bond market. Yet the ultimate scale of the build-out remains deeply uncertain. Bloomberg consensus forecasts imply that hyperscaler capital spending alone will surpass $1 trillion per year from 2027 onward, with no clear signs of moderation. In fact, capital needs have been so large for the hyperscalers that they started to diversify their debt issuance into a range of foreign currencies. While the most non-USD issuance has still taken place in the EUR market, as a group, these firms have also tapped primary markets in Canada, the UK, Japan, and Switzerland, albeit to varying degrees. Beyond just the balance sheet re-leveraging impulse that is already widely acknowledged, large issuance figures have led to technical factors becoming an increasingly important driver of relative performance within the AI ecosystem on both sides of the Atlantic. 2026 year-to-date net supply of index-eligible AI hyperscaler debt stands at $120 billion and 22 billion euros in the USD and EUR corporate IG indices, respectively. That said, while 2026 has been a record net supply year in both markets for these firms, it has been far more pronounced for USD-denominated bonds. Collectively, hyperscalers now account for nearly 5% of USD IG index versus just 1.2% for the EUR IG market. One side effect of the rapid growth in the share of hyperscalers is that it has started to drive relative performance across both sides of the pond. For example, consider bonds issued by Amazon and Alphabet, Google's parent company, in both the EUR and USD market. In theory, the underlying company fundamentals that drive credit spreads should be largely identical regardless of currency. However, a gap in spread performance has started to emerge, and even though it has slightly closed over recent sessions, it remains near the widest levels of the past few months. This performance differential is difficult to attribute solely to firm-related risks. Instead, it points to indications of demand fatigue in the USD IG market on a relative basis versus its EUR IG peer. Index performance and spread dispersion. In addition to the relative value between issuer-matched USD and EUR bonds, there are 2 other effects that the wave of AI issuance is having. The first is overall index performance. The outsized index share of hyperscaler capital structures has effectively introduced a new risk factor into the USD IG market, whereby index-level spreads can drift higher due to the underperformance of just a handful of large issuers exposed to the AI theme. Since the start of the year, a gap has opened between the USD IG index, both inclusive and exclusive of the 5 hyperscalers. The EUR IG index doesn't yet have a large enough concentration for a similar effect. Of course, for the USD IG index, this is symmetric, and if the hyperscalers' spreads started to outperform, they could tighten overall index spreads. The second effect is spread dispersion. While headline USD IG spreads continue to trade near their recent tightest levels, under the surface there has been significant dispersion at the individual bond-level time series of the duration-weighted share of the USD and EUR IG markets that have widened by more than 30 basis points, BPS, relative to the index over the prior 2 months. What is striking about this figure is not that the share of the USD IG market that has widened relative to the index over recent weeks is higher than in its EUR IG peer. It typically is, but rather that the share has recently reached levels not seen since April 2025, the immediate aftermath of the Liberation Day tariff announcements. At the same time, The under-the-surface dispersion in the EURIG market, at least as viewed through the lens of this metric, has barely moved at all and remains well-behaved. To be clear, since this measure uses a rolling 2-month window, it tends to retrace over time, as we have seen over the past few weeks, but it nevertheless remains elevated relative to the past 20 months. Thank you for listening. That was the Credit Market Lens, the AI split between US dollar and euro investment grade. For future insights, please follow us on your favorite podcast platform. This episode uses an AI-generated voice. The discussion and content provided within this podcast is intended for informational purposes only and may not be appropriate for all investors. Reliance upon information provided in a podcast is at the sole responsibility of the listener. The information included herein is not based on any particularized financial situation or need and is not intended to be and should not be construed as a forecast, research, investment advice, or a recommendation for any specific PIMCO or other security, strategy, product, or service. Past performance is not a guarantee of future results. All investments contain risk and may lose value. Investors should speak to their financial advisors regarding the investment mix that may be right for them based on their financial situation and investment objective. Podcasts may involve discussions with non-PIMCO personnel, and such content contain the current opinions of the speaker, but not necessarily those of PIMCO. Other podcasts may consist of audio recording of an existing PIMCO article, and such material contains the current opinions of the manager. The opinions expressed in all podcasts are subject to change without notice. Information contained herein has been obtained from sources believed to be reliable, but not guaranteed. PIMCO, as a general matter, provides services to qualified institutions, financial intermediaries, and institutional investors. This is not an offer to any person in any jurisdiction where unlawful or unauthorized. For additional important information, go to www.pimco.com/gbl/en/general/legal-pages/podcast-disclosures.